Morning, John.
Hey, Kerry. Yeah, it looked like 2016 was a pretty good year and kind of a takeoff year, maybe, when we finally started growing organically and the Fed didn't have to flood the system with cash to keep us from dropping into a depression. But the latest batch of numbers have come out disappointingly. As you said, consumer spending stalled in March. U.S. manufacturing grew, but grew less than expected in April. And small business borrowing has kind of flatlined, and oil is down, and gold and silver are down today. And the first quarter GDP number at the Atlanta Fed's GDP Now portal has been trending down for basically the entire quarter. And now it's at 0.2%, which means virtually no growth in the first quarter. And based on the numbers that we've seen since then, doesn't look any better in the second quarter. So I think the people at the Fed are kind of scratching their heads now and wondering whether the whole, we're going to raise interest rates 3 times this year and start decreasing our balance sheet. In other words, start to suck money out of the system, whether that makes sense after all. So who knows? You can't tell much from 1 month's worth of stats, but these are disappointing stats from the point of view of the people who were hoping that the things they'd done in the past would end up generating strong growth and, allowing the government to borrow less, yada, yada. The whole organic, sustainable growth story is starting to fade again. And if that's the case, that means several really bad things, basically, that the debt in the U.S. and around the world will continue to grow faster than GDP, which means we're digging ourselves ever deeper into a hole from which there's already no escape. But, to the extent that the hole gets even deeper, it means the trouble when there's a reckoning will be that much greater. And a year of extremely low growth, like what we're apparently looking at now, means the debt is going to spike relative to GDP. And not just here, but around the world. If the U.S. is not growing, it's hard for the rest of the world to put up good numbers. So, we're not the absolute dominant entity in the global financial system like we used to be, but the U.S. is still very important. And if we don't grow, it's hard for anybody else to grow. So that means that this late in the cycle, we're 8 or 9 years into a recovery, when government finances usually start to improve dramatically because everybody's at work and they're all paying income taxes and companies are reporting big increases in earnings and also paying corporate taxes, and then that tops off the government coffers, allows them to either borrow less or to actually pay down debt. And improve their finances marginally before the next recession. Well, we're not seeing that now. Everybody's still borrowing like crazy. And more so in some places than others. China's debt binge has really accelerated lately, and it's got a lot of people spooked. But also in the U.S. and Europe, we're all borrowing way too much money going forward, and extraordinarily too much money considering where we are in the business cycle. So these latest batch of numbers, this is scary on a lot of levels and definitely bears watching.
Yeah, well, that kind of underscores why Trump by his administration just released a sweeping tax reform proposal. What's your feelings about it? Is it going to make any difference? I'd say what's in it first.
Yeah, I think one way you address an economy that's not as dynamic as you'd like is by looking at the structural impediments to dynamism. In other words, what's stopping businesses from building new factories and people from getting hired and investing their money in productive ways? Well, high taxes, of which the U.S. has high corporate taxes, at least. Although, it's a high rate on corporate taxes, corporations right now, but most corporations don't pay that rate. Same thing with individuals. The marginal tax rate might be 35%, but you're not going to pay that. If you make the kind of money that puts you in the top tax bracket, you hire people to figure out how to avoid paying that higher tax rate. So it's not clear that structural changes in a system like this, where it's riddled with loopholes, makes all that much difference. The best you can hope for, I think, is to simplify things and then throw a lot of accountants out of work. But it's not clear that that's some kind of magic bullet that all of a sudden turns an over-indebted economy into a dynamic, organically growing one. The debt is really the problem, more so than structural issues for the U.S. And there's no policy fix for this much debt. You take it on and then you have to deal with the consequences of it at some point in the future. That's where we are. We're living in the future of people who made really unwise decisions regarding debt in the past. And they've saddled us with really insane amounts of money that we owe. So you can never have a normalized economy again under this kind of debt regime, because if interest rates go back up to normal levels, which is really a prerequisite for a fully functioning economy, you got to have high enough interest rates that it pays to save. Because if people don't save, then the whole system just grinds to a halt. But if interest rates are zero on bank accounts and 1 or 2% on high grade bonds, there's no real incentive for people to sock money away, because they actually lose when you adjust for inflation. But with this kind of debt, we can never go back to interest rates that incent people to save, because it is debilitating for the borrowers. Because if you've got to roll your debt over, you have some 1% debt that you've got to roll over, but interest rates have gone up to 4% in the meantime, then your interest cost just quadrupled. And there are very few entities out there in the global financial system that can handle a quadrupling of their interest expense, because they're already paying a lot, even at low rates, because they've taken on so much debt in the past. And a lot of governments, believe it or not, are actually making money on their debt. The Swiss government, the Swiss central bank, reports a profit on the Swiss national debt because Swiss interest rates are negative. Mm-hmm. You take that away, you make those guys pay 3 or 4% for money, and all of a sudden there's a huge swing in their finances. Much worse, by the way, for Japan if that happens, but also really bad for the U.S. and most major European countries. And so we can't get there structurally from here without some kind of an addressing of the debt that we've taken on. And there's no way to do that without extreme pain. You can't get rid of debt other than by inflating it away, which hurts the people we were talking about. That hurts savers more than anything else, because it means their savings evaporate in real terms. Or you can get rid of debt by collapsing under the weight of it and having everybody default, and the debt goes away because the companies that borrowed the money and the governments that borrowed the money either cease to exist or change form in some really fundamental way, and to get rid of their debt. And that's incredibly painful for basically everybody. There's no way that a 1930s style depression happens without incredible pain across the spectrum in the major economies of the world. But that's it. That's all we've got to look forward to. It becomes a question of timing. As I've repeated on your show a dozen times now, Carrie. It's just we can't know when it's going to happen, but it kind of has to happen. So to get back to the Trump part of the story, I'm not optimistic that a change in some tax rate or certain regulations or really anything else emanating from Washington right now can fix the problems that we've created. And I'm not a huge fan of Trump the person, but I suspect he's going to get blamed for the consequences of all the debt that his predecessors have taken on. And he doesn't deserve that. He deserves some other stuff, but he doesn't deserve to be blamed for the debts that were taken on under the Reagan administration and the Clinton administration and Bush and Obama. These guys in various ways raised the amount of leverage in the system during their time in office and created bigger problems for their successors. So now Trump inherits all that. Mm-hmm. And when it blows up, see, the thing is, there's no way to know when it blows up. I thought it would blow up under Bush, and I was sure it would blow up under Obama. Now it really seems likely to blow up under Trump. But we've been able to keep this going for
12 years later, and it's still ready to blow up.
In 12 years later, and vastly more leverage. We've been able to keep this going by borrowing just absolutely insane amounts of money. As all your listeners know now, the Bush administration doubled the national debt, or at least doubled the debt of the federal government, which means they borrowed as much as all the previous presidents combined. And then Obama did it again. And, Trump is looking at doing it again with his military buildup and his tax cuts and his infrastructure build out. Those three things cost money in the short run, and possibly they generate tax revenues down the road, but they cost money up front, which means during the Trump administration, let's say he gets 8 years, the first 5 or 6 years are going to be a period of dramatically increasing government debt with no guarantee out there that we end up with 4% growth and a budget surplus, any of the things that Keynesianism says we should get from massive increases in government spending, because it hasn't worked over the past 30 or 40 years. And it's working less well now than it was back in the 70s and 80s. We're trending in the wrong direction. The marginal productivity of debt is going down, which means the more you borrow, the less bang you get for each buck of borrowed money. And we're rapidly heading towards zero on that stat, which means we can borrow all we want to, and we will get nothing for it except more deeply in debt. Like the old song goes, right? Another day older and deeper in debt. And that will be the situation of the major economies of the world. Actually, I kind of think it is the situation now.
Well,
because the money we've borrowed over the past few years obviously hasn't done much because, as we began the show with the stats coming out of most major governments are not that impressive now. We're not growing fast enough to slow down the increase in debt to GDP. And that should be the goal of every major government at this point.
Well, I would aver, John, we've passed that point, and I think it's to the point now where all the debt that's taken on, certainly by the governments of the world, actually is having a negative effect. Rather than boosting economic activity, it's actually getting to the point where it's lowering it because of the crowding out effect, crowding out other buyers and borrowers, I should say. And because how can you compete against the government? 0%, right? And it's really turning negative. If it hasn't already, it will. And when we reach that point, then all hell is going to break loose.
Yeah, I agree that that day's out there. Yeah. And it has felt like it was imminent, but it's felt that way for a long time. So we can't say, oh, this is the year that it happens or next year it happens. But next year certainly is the year that it could happen, could very easily happen because the conditions have been created for some kind of really hairy financial crisis. And, if it's 2018, so be it. And the people who are going to be hurt by it are probably the ones who are least prepared. So I don't know. No, another interesting thing that's happening is in real estate where the housing bubble is back. Home prices are just soaring in a lot of markets.
Correct.
At the same time, we're seeing instability in a lot of lenders. There's a Canadian lender, a big mortgage lender that just kind of blew up lately.
Yeah, I heard about that.
Yeah.
And
so there's a lot of question about whether that is a contagion-worthy event. So we'll see. It's possible.
Yeah, well, Canada, their real estate bubble never stopped. And now perhaps it might be stopping. We don't really know that yet. But they do everything they can in their power to keep that bubble going. At the very least, they're going to take a breather. But in all likelihood, it could very well have gone. It might be over, their housing bubble, in which case it's only Canada. Who cares about Canada, right?
Well, yeah. Canada is a developed country. It's a very rich country, but it has some developing world problems because of its small size. The population of Canada is not much more than the population of California. So it's not a big country in terms of population, which means that hot money flowing in from countries like Russia and China can swamp the Canadian economy. And that's kind of what's been happening lately, where China borrowed insane amounts of money over the past decade, created a lot of millionaires with that money. And now those millionaires are terrified by what they see within their own country. So they're trying to get that money out of the country and put it somewhere safe. Canada's on the list. So Vancouver real estate just went crazy over the past decade. And now it's starting to moderate because it got so expensive. And the attention has turned to Toronto, where Chinese money is pouring into Toronto. And you get, bidding wars with over both houses and commercial buildings, where you'll have 11 or 12 buyers bidding above the asking price. And then you ask for cash, and then they make some phone calls overnight and they show up with a suitcase of cash. That's kind of how that market is working now. And a lot of that money is Chinese money flowing in. So fascinating prospect or process to watch from a safe distance, but must be terrifying to people trying to run Toronto in a rational way. So they're trying to staunch the flow of hot money coming in, and nobody has really figured out a way to do that successfully yet, because there's just so much hot money out there that go ahead and raise a 15% tax on foreign money buying stuff. They'll pay that extra price and just keep on buying, because the alternative is to leave it in an unstable system where it might be completely confiscated.
Yeah, or you might be tossed in jail and all of your worldly possessions taken from you without any notice, without any, what we'd call, although it's rarer and
due
rarer.
Process.
Yeah, I was going to say rarer and rarer in this world, due process, which means fair process.
Yeah.
It used to be we had that in the U.S., but that seems to be a thing of the past. So, yeah, when you're in China, you're trying to get everything you can out. And I saw this trend about 5-6 years ago because in the Bahamas, in Nassau, they decided to build a huge mega casino, and the Chinese Export-Import Bank or something like that financed it. And it was a couple $2 billion. And there's no economic justification for this. It's going to fail. And not only that, it's going to make the existing casino on Paradise Island, which is the Atlantis, also make that fail, which it did. And then it dawned on me, so the Chinese are going to wind up owning this whole casino complex. And what's better for pulling money out of China than having a losing corporation that constantly needs capital taken out and infused to keep it going? So this is better than having a money-making proposition, because once you're losing, the Chinese government doesn't know how much is really losing. So if it's losing $10 million a month and you pull out an extra $2 or $5 million, the Chinese are not even going to know about it because it's so easy to overstate those losses. It's harder when you have an overseas subsidiary that's making money. So the sole purpose of that production there, that project, as our good friends to the north would call it, was just to create a money-losing siphon vehicle to pull money out of China and invest it in safer environs. Amazing.
Well, casinos are cash businesses. They're the quintessential money laundering machine. Yes. So, yeah. And now toss Bitcoin into the mix.
Uh-huh.
And you can move money instantaneously around the world, which allows you to bypass capital controls. So, governments are having trouble, and corrupt governments that have mismanaged their finances are having more and more trouble keeping money in-house now.
Correct.
Which adds to the amount of hot money that can flow into perceived safe havens. Right. So that increases Switzerland and Canada's problems.
Yeah, that's it. As well as the U.S. I mean, we actually are a safe haven. That's right. Yes. People buy treasury bonds and they buy, Miami condos and Seattle houses and things like that for the same reason, because it's a place to park your cash while you wait for the dust to clear and things to sort out in your home country. Exactly. Could not agree more. And, the Chinese are really experts at money laundering, and they're getting better. I mean, it's like the producers that, if you ever saw that movie or the Broadway play where Zero Mostel and I can't remember his name, but they basically come up with a scheme where they're going to create a play and they're going to get tons and tons of investors. They're going to sell 10,000% of 100%. But the key is the play is so bad that it's going to fail. And basically it's going to fail and they'll just pocket the money because everyone expects the thing to fail. And it's so bad that it actually succeeds. And then they're really in trouble and they wind up in jail. And the question is, where did we go right? Where did we go right? We got the worst director. We got the worst script we could find. We got the worst actors. And then where did we go wrong? Where did we go right? Because it succeeded.
Yeah.
And that's what we got here in China. It's like, hey, we just want this thing to fail so we can suck money out of the country. And then what happens, right? It did fail. There was no possibility that one could succeed. And that was Gene Wilder. That's who it was. Zero Mostel and Gene Wilder, I believe. And so and believe me, that's not the only one of these things around the world that they've set up just for this purpose. So it doesn't matter whether it earns a profit or not, as long as it's a vehicle to remove funds from the country. It's leading to bad economic decisions. And when the crash does really hit us, it will be far worse than it ever would have been, because all of these bad decisions were made not doing projects on their economic merits, but on how much money we can basically pretty much launder out of the country. It's a giant money laundering scam, basically, right? I mean, that's what it comes down to.
Well, the China story is so multifaceted. It's amazing because they set up all these shadow banks, basically, state and regional enterprises are able to borrow money at really good rates because they're sort of kind of part of the government. And then they lend that money to build empires in their little regions, a lot of which is misspent. It's misallocated money and is not now generating any kind of cash flow. But we don't know who owes what to whom or how bad the situation is in any given place because it's really opaque. They don't report, gap numbers or anything the way U.S. companies and to an extent municipalities are required to. So the thinking is now that there will be a lot of unpleasant surprises going forward when we actually figure out just how bad things are in these provinces and just how near to bankruptcy a lot of these big companies are. We saw a couple just lately, a dairy operation that was one of the biggest in the world and the biggest aluminum smelter in the world in China, both kind of crashed and burned and had to be bailed out. And if that's just the tip of the iceberg, which it probably is, then China's going to be an ongoing story going forward. And the guys who got their money out of the country are going to look pretty smart. They're going to be glad they did.
Yeah. Well, we got those collateralized bovine obligations. CBOs that are going to blow up, and there's so many more like them. I mean, we've done some crazy things in this country in terms of finance, pushing the envelope, if you will, but we have nothing on China. I mean, they're far worse than we ever were because there were no rules there. I wouldn't call it pure capitalism. I'd call it pure crony capitalism. And it was an anything goes environment. And speaking of going, we got to go, but check out John's work at dollarcollapse.com. Sign up for his newsletter. Sign up for our newsletter, financialsurvivalnetwork.com. And while you're at it, if you got any questions or comments, email us at kl@kerrylutz.com. Twitter feeds at Kerry Lutz. The Facebook page is Financial Survival Network, where we try to only post absurd news, of which there's just so much of it. Like, for instance, John, there's an article that if you eat chocolate cake in the morning, it's good for you.
Oh, that's good news, Kerry.
So I'm changing my diet, which is what I put on the Facebook page. So eat lots of chocolate cake for dessert, or I should say for breakfast in the morning. Make breakfast a dessert, and we'll leave it at that. Talk to you next week, John.
Okay, thanks, Kerry. See ya.